What's the difference between FICO scores and non-FICO credit scores? This is a question that we often hear. And instead of me just breaking it down from my perspective, which I've done before, I decided to give it to you from the horse's mouth. And that would be directly from myFICO.com. What up, you got Mr. Smith, point five of Mr. and Mrs. Smith, and in this brief video, I want to talk to you about the difference between FICO scores and non-FICO credit scores. And I'm going to read this, pretty much verbatim, and then kind of give my perspective on it, just so you can understand the difference. Now, I will say this on the front end, because I know since this is coming directly from myFICO, naturally is going to be biased towards FICO. So I will highlight some of the other FICO scoring models and what their purpose is, just so you don't get a one-sided viewpoint. Majority, you're going to get this, but basically the other scoring models are great for keeping track, knowing that something is changing, you're progressing, you're getting things deleted. It's great for keeping track, and it's less expensive typically, but it at least lets you know you're moving in the right direction. However, myFICO is the gold standard, and if you want to tap into getting your FICO score, you can click on bit.ly/your FICO score, or you can just click the available link below and grab a free credit class along with some other things that can help you take your credit from where it is now to where you want it to be, as well as other things that can just help you financially. I'll say that. So click the available link below ASAP, grab your free goodies, and tap into the myFICO. Let's dive in. So what's the difference? Not all credit scores are FICO scores. For over 25 years, FICO scores have been the industry standard, like I said, the gold standard, for determining a person's credit risk. Today, more than 90% of top lenders use FICO scores to make faster, fairer, and more accurate lending decisions. Other credit scores can be very different from FICO, sometimes by as much as 100 points. And this is true. And sometimes the FICO scores can be higher. I've seen that recently as well. Meaning that if you're thinking it's lower than what it's thinking is one thing, you might check the FICO and it's actually a little bit better, so I've seen that. So I'll just leave it at that. What's in the name? When it comes to FICO scores versus credit scores, the answer is quite a lot. FICO scores are used by 90% of top lenders. This is important to make decisions about credit approvals, terms, interest rate. Chances are when you apply for a mortgage, an auto loan, credit card, new line of credit, bank or lender is looking at your FICO score. The reason? Lenders know what they are getting. When they review a FICO scores are trusted to be fair and reliable measure of whether a person will pay back their loan on time. By consistently using FICO scores, lenders take on less risk and you get faster and fairer access to credit you need and can manage. FICO scores use unique algorithms to calculate your credit risk based on the information contained in your credit report. While many other companies design their credit scores to look like a FICO score, the mathematical formulas they use can vary greatly. Unfortunately, the methods used by these other companies can lead to credit scores that are very different from your FICO score, and even just a few points difference can have a significant consequence on your terms and rates, potentially costing you hundreds or even thousands of dollars. Learn how FICO scores are calculated. And we'll get into that in another video. So what you got to understand is, majority of the people who are going to be pulling your credit are using FICO scores. So if that's the case, it will be a great idea to understand what your FICO score is. And many times if you have a credit card, your credit card may offer you a free FICO score within your membership of just being a credit card holder with that company. So look at the details, but if not, definitely you can get access to it by using the link below. But just understand that since majority of people use that, that's why it's important to at least know it exists, know how it works, tap into it. Even if you pull your scores from FICO every 90 days, depending on when you're trying to qualify for something, and you pulling your own credit will never be a hard inquiry. So just in case you're wondering that. All right, so why do FICO scores matter? Imagine a world where every lender used a completely different method to decide whether or not to give you a loan. You have no way of knowing whether you will be approved at one place and denied another. This was actually the case not that long ago. There were all kinds of different ways that lenders would make decisions about extending credit, including data about a person's address, type of employment, and gender, among other things. People were often approved or denied based on inconsistent and sometimes unfair information. In 1989, FICO scores were created as a way to help streamline the decision-making process for lenders and make the lending process for more consistent and fair for people like you. Top 3 reasons you should choose FICO over non-FICO scores. For years, there has been a lot of confusion among consumers which credit scores matter. So I'll just go into the top 3. I'll skip over that quote from the Wall Street Journal. But Wall Street Journal, you know, people look at them as reputable. So that's that. So why choose FICO scores over the other scores? Here's just a few reasons. Number 1, and stick around to the end. I want to give you some free. Number 1, you can be confident you're seeing a score many lenders actually use. Because FICO scores are the most widely used scores, it is very likely the lender will check your FICO scores when you apply for credit. Number 2, you can make more informed financial decisions. With FICO scores, you're better prepared to know when to apply for credit because you're viewing the scores used by 90% of top lenders. That's good to know because now it gives you that additional confidence. Remember, non-FICO credit scores can differ by as much as 100 points. Other credit scores may vary from your FICO score by several points. The variance could cause you to overestimate your likelihood of getting approved. According to a recent Consumer Union report, score discrepancies can give consumers the false hope that they qualify for credit or low interest rates when they do not. Consumers can face higher interest rates than expected or be denied credit. On the flip side, non-FICO credit scores can lead you to underestimate your credit worthiness, keeping you from purchasing a much-needed family car or refinancing a mortgage that could save you thousands in interest. Number 3, you get 25 plus years of experience in scores that evolves to meet your needs. The way we use credit has changed a lot since the first FICO score. For example, today we use credit cards more frequently and loans are larger to accommodate rising costs. As spending behaviors have changed, FICO scores have evolved. For instance, FICO scores continue to accurately predict credit risk so you can get access to the credit you need and get credit that you can manage. By choosing FICO scores, you're getting decades of industry-leading knowledge and expertise that lenders value and trust. So here's just some other examples. I won't read that verbatim. And then it just basically says if it doesn't say FICO score, it's probably not a FICO score. You know, and then they have a list of places where you can actually get FICO scores and show people who are actually using the FICO scoring model. And I click on here, but it gives you a sense of trust just to know, or a sense of confidence when you're applying. If you know your FICO score, it's like, okay, this is my FICO score. So, you know, I know that's pretty much what they're going to be using. So when they pull it, I already know that I'm in good shape because I've already looked at what they're about to look at. So that's just a nugget within itself. So where to get your FICO score? So they got a list of spots of people who use FICO scores all across the board. And as you can see, it's quite a bit. And you'll recognize some of those companies. Some you won't, some I do, some, I'm sure you don't. But there's a ton of different companies that are already using it. And basically what they're saying is, the point they're proving is, it heightens the chances of you actually knowing that you'll qualify for something due to the fact that so many people already use them. So it's a good chance that they're going to pull from the place that is widely used for the consistency of the score and the scoring model, and really trusting that you as the borrower is more likely to pay back. They want to understand that you have some level of credibility in terms of your credit score. So that's the reason why, directly from the horse's mouth, myFICO. So basically, if you want access to what I have for you, which is a free credit class, as well as, I'll just leave it at the free credit class. Get access to the free credit class. All you have to do is click the available link below, take instant access of it, and you'll understand what you need to do from a FICO scoring model in order to heighten your score. Because what we base the levels of the things you need to focus on is based on the FICO scoring model. And once you understand those things we teach in that free credit class, now you know exactly what you need to be doing in order to take your credit from where it is now to where you want it to go. That's all I got for this video. If you have any ideas or concepts you want us to go over, comment below. I'll dive in deep and hopefully answer your question. If not, hopefully this video serves you well. Share this with somebody else you feel may benefit. Mr. Smith, signing out.